The daily dollar, more than just pocket change. Do you ever stop and think about where your money goes? I mean, really think about it. So many of us buy a coffee every morning, or maybe it's a soda in the afternoon. Perhaps it's a little snack you grab on the way home from work. It's just $1 or $2, right? What's the big deal? We often tell ourselves it's such a small amount, it doesn't really matter in the grand scheme of our finances. But I am here to tell you, my friends, that every single dollar has power. Every single dollar has potential. And those little daily expenses, they add up faster than you think. $1 a day is about $30 a month. That's over $360 a year. What if that dollar, instead of disappearing on something you forget an hour later, could actually work for you? What if it could grow and build a more secure future for you and your loved ones? Are you ready to see how powerful that one little dollar can truly be? Good, because you deserve to know. Alright, let's play a little game of what if. Picture yourself back on January 1st, 2000. The world was worried about the Y2K bug, remember that? Computers were supposed to crash. But they didn't. Life went on. Now, imagine on that very day, you made a simple decision. You decided that every single day, you would take just $1 and invest it. $1 every day. Through good times and bad. Many people underestimate the power of consistency. This is the core idea we are exploring. The power of small, consistent investments. Okay, let's get down to the nitty-gritty. Let's talk numbers, because numbers don't lie. From January 1st, 2000 to today, June 10th, 2025, that's over 25 years. If you saved $1 daily, you'd have $9,286. But what if you invested it in an S&P 500 index fund? That fund holds stocks in 500 large U.S. companies. Investing your $9,286 could grow to over $42,000. Yes, over $42,000 from just $1 a day. So how does this incredible growth happen? How does $9,286 turn into over $42,000? A big part of the answer lies in a concept that Albert Einstein supposedly called the eighth wonder of the world. I'm talking about compound interest, or, in the case of stocks, compound returns. It sounds complicated, but it's actually a very simple and beautiful idea. Compound interest is essentially your money-making babies. And then those babies grow up and make their own babies. It's your earnings generating even more earnings. It's a snowball effect. Imagine you invest some money, and it earns a return. Let's say you earn $10 in interest or growth. With compound interest, that $10 you earned gets added back to your principal. So now, you're earning interest not just on your original investment, but also on the $10 you already gained. Your money starts to grow at an accelerating rate. Now some of you might be thinking, Suze, the stock market is so volatile, it goes up and down. How can I be sure I'm not investing at the wrong time? That is a very valid concern. And it brings us to another important concept that works hand in hand with our $1 a day strategy. It's called dollar cost averaging. It sounds a bit technical, but I promise you it's a very straightforward and smart way to invest, especially for the long term. It helps take the guesswork and the emotion out of investing in fluctuating markets. Dollar cost averaging simply means investing a fixed amount of money at regular intervals, regardless of what the market is doing. In our example, it's investing $1 every day. When the market is high, your dollar buys fewer shares of that S&P 500 index fund. But when the market dips and prices are lower, that same dollar buys you more shares. Over time, this strategy averages out the price you pay per share. You avoid the trap of trying to time the market, which is trying to guess the perfect moment to buy low and sell high. With dollar cost averaging, you take the emotion out of it. You just stick to your plan, investing regularly whether the headlines are screaming boom or bust. Alright, so you've heard about the potential, you understand a bit about compound interest and dollar cost averaging. You might be thinking, okay Suze, I'm interested. But how do I actually do this? It still sounds a little intimidating, I hear you. But I am here to tell you that starting to invest today is easier than it has ever been in history. You do not need to walk into a fancy brokerage firm with a briefcase full of cash. You do not need to be a Wall Street guru. You just need a little guidance and the will to begin. The wonderful thing about modern technology is that it has democratized investing. There are now numerous online brokerage platforms and investment apps that are designed for beginners. Many of them have no account minimums or very low ones. This means you can literally start with that $1 a day or $5 a week or whatever small amount you are comfortable with. These platforms often offer commission-free trading for many investments, including index funds like the S&P 500 fund we've been talking about. They are designed to be user-friendly and accessible. The most important thing is to take that first step to get started, to overcome the inertia and the fear. We've talked a lot today about numbers and strategies. We've talked about compound interest and dollar-cost averaging. We've seen how a mere $1 a day, invested consistently since the year 2000, could have blossomed into a sum of over $42,000. That is truly remarkable. But if there is one single message, one crucial takeaway I want you to remember from all of this, it is the profound and unbeatable power of consistency. It's not about how much money you start with. It's not about finding the next hot stock. It is about the discipline of regular, unwavering action over time. Think of building wealth like building a strong fortress. Each dollar you invest is like laying another stone. One stone by itself might not seem like much, but day after day, week after week, year after year, those stones add up. They reinforce each other. They create something strong, something secure, something that can withstand the storms. Your consistent investments, no matter how small they seem initially, are those stones. They are building your financial security, your financial independence, your financial peace of mind. So make sure to like and subscribe for your weekly money facts to build your fortune.